Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in with the market. So we had SPY, and this is actually factoring in some after hours. The candlestick closed more like a doji, but it is a bullish reversal candlestick. And we are looking at the potential of this being our weekly higher low. So things are getting really tight, and if it were, and if we do see green tomorrow and follow through and the bulls head up to the 265, 266s and close strong, then I will be pretty confident that our range is now really tight, and we're going to be looking for a break early to mid-May rather than mid to late May. And that's because this would make our range 260.85 to 271.30. So just check out the weekly time frame right now and imagine we have another green day tomorrow on the back of Facebook bullish earnings. We're seeing Netflix and Amazon and Google all up in response to this, so the tech sector getting some relief thanks to Facebook. But if we see another green day and get up to the 265, this is going to be a bullish candle and fairly similar to the opposite of last week. So that would give us the all-time high, low, lower high, higher low, lower high, and potentially the higher low right here on this next candlestick. So it all depends on how tomorrow goes for me as to whether I'm not a believer that this is our new higher low. And I do need to see bullish follow through. And if it is not, we could still pull back, bounce off the 200-day moving average, and hold 254.67 to find that higher low. So it's not like this has to be the higher low for the bull. We're just watching this bullish reaction to these earnings. Amazon earnings is going to have another impact. So how we react tomorrow for the tech sector and then Amazon after hours is pretty much going to dictate whether or not we see the equilibrium really tight or whether we're still going to be looking for a higher low. And IWM, bullish reversal candlestick holding this support band again, second day in a row. 5 red days in a row. We're looking for a turnaround. We need hourly higher lows and higher highs. And SPY broke the hourly lower highs on. So now we need higher lows and higher highs on both of these markets to give us confidence that we're heading back up. So IWM, this would be a little bit. This is obviously bullish if that were our higher low, but I do not believe that this is our higher low just because of how much more space there is to the downside. In my opinion, I'm going to be a little bit more patient before calling one of these moves a higher low because we could easily see a little bounce and then continuation down and find support in the low 150s, still maintaining the weekly higher low and having this equilibrium look a lot more even and spaced out if we were to see that pullback. So it is possible that the tech sector and the earnings reactions could make this a really tight equilibrium that breaks bullish, but I need to see more follow through in the coming days ahead. The next 2 days for the rest of the week going to be pretty important for me. QQQ, bullish reversal candlestick, same thing. Hourly trend needs to change. We need follow through on this candlestick. We need confirmation. And on the weekly time frame here, it's the potential head and shoulders reversal pattern. And the bulls can make that less likely if they can make the price go back up into the 160s as we head into the end of the week with a long lower wick. We had the big upper wick of profit taking last week on SPY and QQQ. And now the bulls are trying to form a long lower wick, showing bulls buying the dip. And definitely would have this tightening range, making things interesting early May. VIX on the daily time frame, upper wick of profit taking, did break the hive yesterday, but not by much. This is not a strong bounce. Definitely gains to be had there for short-term traders, but not a strong bounce overall. You look at the weekly time frame, and that was not getting close to a lower high. You would expect the bulls to get up to the mid-22s, only got up to 1984. So this would certainly be a weak bounce if we started to head back down towards the low of support of 1457. That would favor VIX bears and market bulls if this were to play out. So it all depends on whether or not the bulls hold these reactions to these earnings reports and whether or not Amazon is bullish tomorrow. Let's say Amazon goes bearish tomorrow after hours and the market reacts and the tech sector reacts. Then we're going to be right back in a scenario where I'm not confident that our daily and weekly higher lows have been established, and we're going to continue waiting patiently for further consolidation to make those equilibriums look a little bit more even visually. So I would expect SPY 250, the upper 250s, 258, 259. I would expect QQQ, or I should say IWM, low 150s. Doesn't have to happen, but just visually, that is what is most likely to happen in my opinion. So we'll be watching close the next 2 days. We'll continue to check in. Have a great rest of your night.